are big international banks great as a sort of source of extra capital that can come in and contribute by sort of offering banking services? Or are they sort of a worry in that they can pull their money out too quickly and it can be destabilizing, and therefore one wants this sort of wall, which you might see the UK ring fence as a reflection of? How do you benefit from international big international banks?
Thank you, John. So we actually welcome international banks here. As you say, they come with a lot of benefits for a developing market like ours. They come with expertise. They come with high standards in terms of regulation, and they also come with a lot of capital. And so we do want to be, we see ourselves as a financial center as a country. We see ourselves as a key player in the global financial system. And therefore we really encourage international banks to come in here, subject to the regulatory requirements we have in place. And we do have a few. For example, and these are all measures that we have in place to mitigate the risks that could be attendant to having international banks play on our market. We're very careful from the get-go that these institutions come in a manner that is ring-fenced from the rest of the group. And so while we encourage them to bring the technical expertise, the regulatory standards to bear on their operations in Ghana, we require that they're set up not as branches of international banks, but as standalone subsidiaries. And therefore, this, if you will, there is a legal ring fencing on an ex-ante basis. Okay, so they're set up as locally incorporated companies with their own boards, with key management personnel from here. And in fact, we even have a rule about 30% of these boards being filled by locals. And so we have a fair amount of local content as well. But it's important to us that there's a legal ring fence from the rest of the group. We also have in place a number of rules so that intra-group dealings, in particular investments across the group, treasury dealings, outsourcing of technology and such important functions are all done with our approval. And so our supervisory staff are very vigilant on these things. We want to make sure that we understand where's the money moving. There is a legal ring fencing, but we want to make sure that money from here, assets are not being transferred abroad, leaving behind liabilities on the balance sheet of the entity in Ghana, right? And so we're very careful about that. And then basically we enter into cooperation agreements and arrangements with the foreign regulators, with the home regulators. So we see ourselves as host regulators. And so we would very typically have bilateral MOUs with the ultimate home regulator of the group. And we even are part of supervisory colleges of some of these groups. And we are part of some crisis management groups as well. And so we really see ourselves as part of the regulatory arrangements for the group, and we like to have these relationships with the home supervisory authorities as well. So all in all, we believe that we have a balance in terms of the risks that may be pertinent, in dealing with these institutions, as well as the benefits that accrue to the nation from their presence in Ghana.
Okay. That I can understand that. It sounds very sensible. So you're a very successful financial sector. I agree, but there's always competition and for inward investment, and maybe Nigeria would also see itself as a possible destination as for inward investment. Is the relationship between sort of your local other sort of neighboring countries, large countries like Nigeria, is that one of cooperation or sort of competition, or maybe a healthy blend of both?
It's a very tricky question. Ghana and Nigeria have a long-standing war on who makes the best jollof. You may have heard about that. So Jollof is a meal, is a rice meal, and there's a long-standing global debate on who makes the best jollof. But when it comes to financial services, we like to see ourselves as partners. We're neighbors. We're part. Ghana, Nigeria, and 14 other nations are part of the ECOWAS regional economic bloc for West Africa. And we do, in the context of ECOWAS, we have a lot of cooperation. Ghana and Nigeria are also part of the Anglophone, the English-speaking part of ECOWAS in West Africa. And we have a second zone called monetary zone, called the West African Monetary Zone, for these 5 English-speaking West African states. And the 2 countries play a very key role in moving things along. And so we like to see ourselves as partners and as key collaborators. They're competing for capital, we're competing for capital. We have quite a number of Nigerian banks actually operating the subsidiaries in Ghana. And so the Central Bank of Nigeria and the Bank of Ghana have a very close relationship in terms of cooperation, even doing joint inspections together, joint examinations of Nigerian banks in Ghana. We're part of supervisory colleges and all of that. So it really is a very, very important collaborative arrangement we have between us. And I like to see that, that's more positive than anything else.